Welcome back. Despite a small dip in mortgage rates last week, applications for home loans to buy houses decreased and are now down a whopping 50% compared to pre-COVID levels. In today's video, I'll share some more leading indications of home buying demand and also our US housing market, including the number of real estate showings, housing inventory changes, and much more. And by the way, if you guys are new here, I invite you to subscribe to this channel right now because I post frequent housing market updates so you guys can be more informed about whether to buy or sell a house right now. Also, if you guys get any value out of this video whatsoever, then please hit the like button. I greatly appreciate that. Of course, I appreciate you. And let's begin today's video. Let's first talk about this report that's actually all over the news right now regarding application numbers decreasing despite a dip in rates last week. This is according to the MBA, just posted today, which is March 27th. Can't believe it's almost April. Anyways, applications for home loans to buy houses and also for refis fell 0.7% compared to the previous week. And this report covers the week ended March 22nd. So let's have a look at refis. So refis decreased by 2% from last week and are down 9% from a year ago. Of course, it makes sense. We're seeing a lack of refinances right now due to 7% rates. What I'm more focused on, which I mention every week here, is their seasonally adjusted purchase index. This is an index which measures the amount of people who are submitting loan applications to buy houses. This is a future look at future home sales in the coming months. So that actually decreased by 0.2% from 1 week ago, but it's down by 16% on a year-over-year basis. Let's take a look at investing.com because the reading for their purchase index was at 145.7, a slight decrease compared to the previous week. And it says here, this has proven to be a reliable indicator of impending or future home sales. So looking at this chart right here, this marks the second consecutive month of decreases of home loan applications. Also, compare this to the previous years. You can see here in 2021, 2022, a high share of people submitting loan applications has been decreasing more or less ever since then. On top of that, comparing this last week compared to the same week of 2019, we're down by about 47%. So overall applications at very low levels. And this, of course, implies we'll see a low level of existing home sales in the coming months as well. Let's get back to the MBA's report here. According to Joel Kahn, who's the MBA's Vice President and Deputy Chief Economist, he stated the following. Mortgage application activity was muted last week despite slightly lower mortgage rates. The 30-year fixed rate edged lower to 6.93%, but was not enough to stimulate borrower demand. So let's look at daily rates. The rate at 6.93% was the weekly rate according to the MBA last week. But as of today, the daily rate according to the Mortgage News Daily is at 6.91%, unchanged compared to Tuesday. Also for a jumbo loan, 7.3%, FHA and VA loans is around 6.4%. So looking at the average 30-year fix, it is below the peak we had back in October at around 8%, but still around 37 basis points higher than it was 1 year ago when the average daily rate was at 6.54%. By the way, again, that's for people with exceptional credit, putting at least 25% down to buy a house, the average rates on a national level. Also looking at Investopedia.com as of today, the average rate, according to them, is at 7.19%. They actually look at, or they actually survey 200 of the biggest lenders on a national level, and looking at what is your average rate based on a loan-to-value ratio of 80%. In other words, you're buying a house, you're putting down 20% to buy that house, a loan-to-value ratio at 80%. Also, they're looking at a FICO score with a wider range, in the range of 700 to 760, whereas the Mortgage News Daily, as well as other websites, look at a FICO score well above that. And that's why they're looking at the average rate much higher compared to other websites at 7.19% right now. One thing you guys should keep in mind as well is that the rate you're going to get quoted can vary quite a bit depending on your credit score. So looking at rates as of yesterday, this is just Googling rates according to Google here, putting 20% down in the FICO score in the range of 800 plus, you're looking at an average rate at around 6.99%. But if we were to decrease this to 700 to 719, it increases to nearly 7.5%. Then if we go down to 640 to 659, it increases to nearly 8.1%. So the fluctuations can vary greatly, in fact, by about a point or 1 percentage point, depending on your credit score. In any case, let's get back to the MBA's report. It says purchase applications were essentially unchanged as home buyers continue to hold out for lower rates and more listings to hit the market. My advice for you guys, if you guys are looking to buy a house, do not wait for rates to decrease. If rates were to decrease from 7 to 6%, what do you guys think is going to happen? Home buying demand is going to increase greatly. You're going to see a lot more competition. And in my opinion, a decrease in rates is going to cause more demand, not a huge increase in supply. In other words, a bigger increase in demand compared to the increase in supply, because a lot of people have this lock-in effect. So I would urge you guys to, if you guys are looking to buy a house when it's right for you. And it's probably better to look at houses when you have more listings available, because that actually limits competition for each house. And of course, if we have the opposite, in which rates decrease greatly, you're just going to see demand increase as well. So I just want to preface that, because I think there's a lot of people thinking that if rates were to decrease, we're going to see a huge increase in supply, but that's not really taking into consideration the huge increase in demand as well. And in my personal opinion, a decrease in rates will see a higher amount of home buyers compared to home sellers. And that's because if rates decrease to 6%, I don't really think a lot of people are going to be listing their house for sale and getting rid of their 3 and 4% rates. But for home buyers out there who had rates at 8% just back in October last year, to decrease to 6%, that's a very big change in your purchasing power, and also a big decrease in your average monthly housing payment as well. Now, speaking of housing inventory, I want to share a new report really quickly with you guys. This is according to Resi Club. They have top-notch articles regarding what's happening right now with the U.S. housing market. It was founded by Lance Lambert. Actually called him several months ago, right when he started this company. They have a lot of analytics regarding what's happening with the U.S. housing market, which I found to be very useful. Not a paid promotion, but a really good website if you guys want to check them out. He reported just on March 13th, about 2 weeks ago. It says active listings are up by 45.8% in Florida on a year-over-year basis. Active listings in Nevada, though, are down by 32%. If you guys follow the channel, I always talk about how real estate is local. And you can see this right here. It says inventory data matters quite a bit. If active listings begin to rise quickly, in theory, it can signal a weakening market. That's exactly what happened in 2022, where inventory doubled in less than 6 months. That's one of the main reasons why prices fell in the second half of 2022. In contrast, if active listings, in other words, housing inventory, begin to fall quickly, in theory, it can signal a strengthening housing market. So they actually reported this right here. 5 states in which active listings are up the most compared to 1 year ago. Florida led the nation, up by nearly 46%. After that, we have Mississippi, Louisiana, Alabama, and Arkansas, all up by more than 20%. In contrast, the 5 states in which inventory levels are down the most are actually in Nevada, down 32%, leading the nation by far. After that, we have Illinois, New Jersey, Idaho, and Rhode Island. And that, by the way, is a change of inventory levels from February 2023 through February this year. He also says, generally speaking, housing markets where inventory or active listings has returned to pre-pandemic levels have experienced weaker home price growth or outright decreases over the past 20 months. In contrast, housing markets where inventory remains far below pre-pandemic levels experience stronger home price growth. I 100% agree with them regarding this because in areas where inventory is skyrocketing, of course, that limits home price growth as more home sellers have to compete against each other. And in contrast, if inventory is decreasing big time, that supports home prices. All right, going back to the MBA's report really quickly here, regarding the amount of people submitting loan applications overall, whether it's purchases or refis, approximately 30.8% of people doing that are actually refinancing still, which is absolutely crazy, right? When rates are around 7%, why are 31% of people actually doing a refi? In my personal opinion, it's probably due to the fact that we're seeing more people doing refis and getting cash out of their houses to do a remodel or to pay for everyday living expenses. Also, the adjustable rate mortgage share or ARM share of activity decreased to 7% of total applications. I believe the 24-month high approximately was around 12%. The low was around 3%. So right in the middle of that, at 7% of applications are doing an ARM. Okay, let's change gears slightly here and look at some more early indications of home buying demand in our US housing market. One report I want to share with you guys is from showingtime.com. They basically look at the total number of real estate showings in North America compared to the first week each and every year since 2020. I've been sharing this report for you guys for what, 4 years now? Anyways, for the week ended March 26, as of yesterday, the number of real estate showings compared to the first week this year rose by 26.1%. At this time last year, it increased by 20.7% compared to the first week last year. Something I found to be interesting is that the number of real estate showings overall have been decreasing ever since mid-March this year, which is much different compared to previous years because in, 2021, 22, and 23, the number of real estate showings in March were increasing, but this year, for whatever reason, it's actually decreasing. Actually getting very close to the changes we saw back in 2021 as well. And lastly, let's have a look at the number of people who are searching for homes for sale on Google, a loosely indication of home buying demand. How many people are actually searching on Google for houses actually for sale? That index right now is at 74. 1 year ago, it was at 89. This means that there's approximately 17% less interest in searching for houses for sale compared to 12 months ago. And with that said, let me summarize today's video really quickly for you guys because there was, of course, a lot of information there. So overall applications to buy houses fell by 16% from 1 year ago. On top of that, down by 47% compared to the same week of 2019. In other words, home buying activity very, very low compared to 2019. On top of that, average daily rates as of today, according to the Mortgage News Daily, is at 6.91%. Still relatively high levels of interest rates, especially when you account for the fact that home prices have increased by about 5% on a year-over-year basis for existing houses. On top of that, we're seeing rates fluctuate quite a bit depending on the FICO score. And we're seeing also inventory levels rising big time in Florida and also decreasing big time in Nevada. Real estate is local. Also, real estate showings have been trickling down for the past couple of weeks. I'll definitely keep you posted regarding that. And also, we're seeing fewer people searching for homes for sale on Google. So I would say overall, home buying demand is still very, very low. And it's going to be really interesting to see what happens for the remainder of the year, especially as we enter, we're basically kind of in the spring home buying season, but especially when we get into April and May. And I'll definitely keep you posted with the latest developments. With that said, I appreciate you for watching today's video. Like and subscribe, and I'll see you in the next video.